Many of the recent announcements for companies planning to go public via SPAC have been these so-called crypto treasury firms as they're scrambling to capitalize on investor demand for crypto. Joining us now is Accelerate Financial Technology CEO Julian Klymochko. His firm runs a fund that tracks the SPAC market and invests in more than 500 of them. You are a brave man, Julian. Maybe it's the VC model. It's like if one of them works out, the losses on the rest of them are fine, right?
That's exactly it. And we're back in a bit of a SPAC boom here, similar to what we saw in 2020 and 2021. And the way that a SPAC works is it's an interesting vehicle because you're allowed to redeem for the cash value, which is typically $10 and change. Plus, you get the upside if they announce an attractive merger candidate, of which many have this year, specifically, as you mentioned, in the crypto treasury company space, which is really proliferating, not just in the U.S. markets, but globally as well.
I was going back to see what was kind of like the best SPAC ever. Maybe it was Vertiv. Was Vertiv a SPAC?
Well, before closing, the Lucid Motors deal traded up pretty significantly.
True.
And if you want to look at one currently, the Oklo SPAC, well,
True.
It's a de-SPAC now. That closed last spring. It's traded from $10 to $60, and that one's been super successful as well. As for the current lot of SPACs, I'd say CEP, Cantor Equity Partners, which recently announced a merger with 21 Capital, that traded from $10 to as high as $50, now around $30, and that's been the most successful of the current era.
I remember some research. It was from, who was it? Maybe Symbolist was doing some work on the IPO boom and found that it was just horrendously unprofitable for investors. It was mostly because of SPACs. So a few of them have managed to do quite well. A lot of them, as you know better than anyone, have struggled. And now this time around, they're back, but with a crypto treasury twist to it. So I would just love to hear what you think would be the case for either, dabbling and getting exposure, finding the diamonds in the rough, like some of the names that we mentioned. What would you tell investors?
Yeah, so you got to be aware of the risk dynamics because typically the businesses going public via blank check company are more speculative in nature. We're not talking about S&P 500 like companies, but earlier stage companies. So they'll follow more of a venture capital type distribution where you'll have a handful of big winners and perhaps quite a few losers. So I think a diversified approach is more appropriate in this area of the market.
All right, so the chart that we're showing up there right now just shows the SPAC listings this year. Renaissance is one of those the Renaissance Capital is one of those companies that tracks these listings and these kind of offerings and registration forms. Their data shows that we've seen 74 SPAC pricings on a year-to-date basis, and that was 4 times that of this point last year in this time frame. Does it say anything about what that would mean for the capital raising markets overall? Is there any view or feeling like the SPAC boom is something that folks maybe want to pay attention to as a cautionary tale?
I think it's certainly worthwhile paying attention to. Now, it's all relative because if we go back to 2021, in aggregate dollar, the SPAC IPO market in that year, they raised $163 billion. If we look at this year, it's $13 billion year to date. So still down kind of 80% on an annualized basis, but up fairly significantly over the past couple of years. So I think it's more measured in terms of the current SPAC bull market. It's nothing bonkers like it was in 2020 and 2021. However, I think it's great to see new capital formation, and it's a trend that investors should pay attention to.